So I recently ran a poll on what video you'd like to see next, and the winner with a whopping 41% of the vote was to reveal my Trading 212 portfolio. Now, I've never talked about my Trading 212 portfolio on here before, but this was actually my very first investment portfolio, and Trading 212 was a platform I used to begin my investing journey. Back then, I was all about picking individual stocks, and since my strategy has evolved to focus more on long-term investments and specifically funds. And I've also moved over my main portfolio from Trading 212 to Invest Engine. However, I've kept some stocks in my Trading 212 account, and in this video we're going to reveal what's in there, and we're going to reveal the portfolio's entire performance from the moment I created the portfolio to now. I'll be doing this with full transparency, and you'll see my early steps into investing were far from perfect. I won't be hiding that, as the goal here is to share real, honest experiences which can then maybe help others in their own investment paths. So let's get into it, and let's start by providing some context on this portfolio. I built the portfolio up in 2021 using a Stocks and Shares ISA account, and we can see using the transaction history here that the last deposit into the portfolio into this account was January 2022. Since then, I've only been making withdrawals, as I've been using Invest Engine ever since this time. So what remains in this portfolio is the stocks I chose back in 2021 and the start of 2022. And if we do the grand reveal of what stocks remain, there's 3 stocks remaining in this portfolio: Google, Microsoft, and ServiceNow. On paper, the percentage gain between these 3 stocks looks very healthy at over 41%. The pound gain is over £216 for a portfolio worth just over £742. However, these figures, and particularly the percentage gain figure, don't provide the full picture of this portfolio's performance over time, and specifically it doesn't provide the full picture of my investing journey. So let's zoom out, let's use this graph, and let's look at the portfolio's performance over time, as I don't want to make this seem something it's not. We can see the portfolio was built up in 2021 and early 2022, and for much of this period the portfolio was doing okay, it was in the green. It reached a high point at just over 4.4k in value in April 2022. However, after that point the portfolio went downhill, as the middle part of 2022 saw a stock market crash, and this was particularly impacting American companies, as the S&P 500 in 2022 was down by over 18%. So this wasn't a good year for the stock market, and it wasn't a good year for this portfolio. We can see at one point the portfolio was down by over £400 in pound terms and over 10% in percentage terms. There was a couple of companies I had in the portfolio at this point, such as Palantir, which did awful and really contributed to this bad performance. That year, my investing strategy was wrong for me personally as a beginner investor. I chose high-risk companies in the search for the next big thing. And you can see in 2023, I changed my investment strategy. You'll see the portfolio value dropped as I sold many of my holdings, and I changed my strategy from picking individual stocks to picking long-term focused funds through Invest Engine. So much of the withdrawals here which came out went into Invest Engine. However, I did keep 3 stocks in this portfolio. I truly believed in these stocks and I just couldn't bring myself to sell them. So these stocks have remained in my portfolio ever since. And let's go through these stocks now, let's go through their performance, and let's go through why I kept them. The first one here is Alphabet, which of course is the parent company to Google. The performance here has been very good. It's up by over 39% in percentage terms and over £65 in pound terms. And I have a total value of £230 worth of Google Alphabet stock. Interestingly, the makeup of these gains was heavily impacted by the currency exchange rate. Over 31% of the gains came from an increase in the value of the stock, and over 8% of the gains came from a positive FX impact. In terms of why I've kept this stock and not sold it, one of the key reasons has been Google's track record of robust financial performance. Year after year, they've been increasing revenues and they've been increasing their profits. And this financial stability was a key reason why I chose to keep the stock. Another reason was the fact they were heavily investing in new technologies, and specifically AI. They were investing in AI considerably at the time I started looking into this stock and started investing in Google. And I fully expected them to be a leader in AI going forward, and I thought AI would be a big trend going forward. So for this reason, I kept Google, thinking they were going to be a leader in this field and they were going to continue with their robust financial performance. Some of those predictions have been right, some of them have been wrong. I expected them probably to be doing better in the AI field. However, this stock has still done relatively well with over a 39% return. In terms of the next stock, that's Microsoft, and this stock has done much better. It's up by over 66% in percentage terms and over £105 in pound terms. Again, there was a positive FX impact here, which has helped the performance of this stock. And the reasons why I kept this stock are very similar to the reasons why I kept the Alphabet stock. Microsoft have a good track record of robust financial performance. This is very well known. Their profit and revenue figures are out there everywhere. They're regularly reported on, and they're usually very impressive. Microsoft have also invested heavily in new technologies and specifically AI. And since I started investing in this, they've become a leader in AI through their partnership with OpenAI. So Microsoft haven't given me a reason to sell, and I still think there's plenty more room for growth if they continue with their current trajectory in terms of financial performance and in terms of their leadership in AI. The next and final stock I kept is probably the most surprising and definitely the least known of those three stocks, and that's ServiceNow. For those not aware, ServiceNow provide a platform which enables companies to manage their IT services. And a lot of companies have adopted ServiceNow's platform in the last few years as it's helped them increase productivity and automate certain tasks associated with their IT services. And this stock has had good performance also, but not as good as the other two we've just gone through. It's up by over 22% in percentage terms and £45 in pound terms. If we look at the financials for ServiceNow, we can see that over the last 3 years, ServiceNow's revenue and net income has significantly increased. And this is one of the reasons why I kept the stock, as I saw plenty of room for growth in terms of their financial performance, which I hope will translate into an increase in the value of the stock. So I'll be keeping this stock also, as I hope to see these financials continue with their current trajectory. And that's the three stocks in my trading 2-on-2 portfolio. If you want to see what my current portfolio looks like with Invest Engine, I have a video around here. But for this video, thanks for watching.